my name is Giannis and today we are going to talk about real estate trends in the Fraser Valley for February of 2019 to see how the market performed overall for single-family homes, townhouses and apartments. In terms of active listings for single-family homes, we had 2,295, 354 sales. The sales to active listings ratio was 15.42%. That means that 15 homes approximately were sold out of every 100. The average sales price was $1,522,000. The mortgage payment based on a 2.9% variable rate, which is prime minus 1.05, the best in the market, and a 25-year amortization for a 5-year variable term was $4,683.74. And the market is balanced because it is within 12 and 20%. In general, a market is a buyer's market if it is below 12%, a balanced market if it is between 12 and 20%, and a seller's market if it is above 20% for consecutive months, for a period of time. In terms of townhouses, we had 1,063 active listings, 236 sales. The sales to active listings ratio was 22.20%. The average sales price was $568,472. The monthly payment based on a variable rate of 2.9% is $2,661.18, and it is a seller's market because it is over 20%. In terms of apartments, we had 1,339 listings, 288 sales. 21.51 was the sales to active listings ratio. The average sales price was $400,371. The monthly payment based on a variable rate of $1,874.25. And it is a seller's market because the sales to active listings ratio is over 20%. Now, the reason I recommend the variable rate at 2.9%, which is 1.05 under the prime rate of 3.9%, is very simple. The government isn't expected to increase the overnight rate by more than 50 basis points over the next, by the end of 2020, and it is possible that they will only do an increase of 0.25%. So instead of getting the fixed rate and overpaying, you are better off getting the variable rate, because once the pendulum swings on the other side and the prime rate then the overnight rate goes down, you are going to have a much better deal on the variable side because your rate will go at 2.9 and lower. So that's why the variable rate is recommended. And the other reason is you have a 3-month penalty with a variable rate if you break your term. If you break your term on the fixed rate, you have a huge penalty. Once rates drop below your current fixed rate, there is a huge penalty calculation that in many cases is in the tens and 20s and 30s of thousands. So you have to be very, very careful when you make your choice between a variable and a fixed rate. Overall, the market is, as you see here, in a gray area situation. It seems to be moving up in terms of townhouses and apartments, but I would say overall it is a market in which there is opportunities for existing homeowners to sell and upgrade to a better location because there is limited competition in the market, and now is the time to actually capitalize on buying a property for a fraction of the price you would buy it in a hard market, as the current market is really declining in a sense. So it is a good time to try to upgrade for existing home buyers, in my humble opinion. Hopefully you found the information very useful, and if you did, feel free to share it with a friend. Thank you and have a wonderful day.